Good evening everybody. In this video I am going to discuss about the how to prepare revaluation account in case of change in profit sharing ratio of partnership accounts. In partnership business, if the partners have decided to change their profit sharing ratio which they have agreed before and they have to change their profit sharing ratio now, at that moment some adjustment they have to occur. They have to make some adjustment in their bookshop accounts. On the date of change in profit sharing ratio, they have to revaluate and reassess their asset and liability. Revaluation of asset and reassessment of liability have to done by them. At the time of revaluation of asset and reassessment of liability, we have to know that how to prepare revaluation account. So let us start the revaluation of asset and reassessment of liability. What does the mean of revaluation of asset and reassessment of liability? When profit sharing ratio change, that means their relationship among the partners are changed. So the asset which is lying before in the business, that should be considered as per the current date, and what is the value of that asset which is lying in the business on that particular date, you have to evaluate and assess the liability which you have to pay to the others, and accordingly you have to decide or make the adjustment as per the Partnership Act. And revaluation of asset and reassessment of liability is done by preparation of revaluation account at the time of reconstitution of partnership firm. Then revaluation of asset and reassessment of liability at the time of reconstitution of partnership firm, the actions related to the revaluation of asset and liabilities are taken, and the number of changes to be distributed among the partners in their old profit sharing ratio, because the assets and liability which is lying from before us in the business, so the reassessment and reassessment of asset and liability and revaluation of asset and liabilities has to be done as per the old profit sharing ratio. Then next, what adjustment we have to prepare in revaluation account? So this is the format of revaluation account, and it have two sides. One is debit side, another is credit side. Here we have to understand that which item we have to take in the credit side and which item we have to take at the debit side. Let us start. When asset increases, when the value of asset increases, then it is taken into the credit side of revaluation account. By asset, an increased value is taken in the credit side, and if asset decreases, it is taken in the debit side as to asset account. Similarly, if liability increases, it is taken into the debit side, and if liability decreases, it is taken into the credit side of revaluation account. If there is any unrecorded asset in the business which is not recorded till date in the balance sheet, then now you have to take into consider in the books of account, and that unrecorded asset is credited to revaluation account and credited the entire value, and the unrecorded liability that you have to take in the debit side which is not recorded till date or as on the date. Then by taking this all the items which we have discussed, then we have to balancing this revaluation account at the end, and if the balancing figure is identified at the debit side, that is called revaluation profit, and this profit is distributed in old ratio among the partners. Or the balancing figure is identified in the credit side of revaluation account, then it is called revaluation loss, and it is also distributed in the old ratio among the partners. So this is the formula and methods of preparation of revaluation account. Thank you.